So I've been experimenting with changing the format here, trying to make this go a little bit faster. So I want to hit highlights. It won't be in the order that you're used to. I'm going to be adding some things, not to this video, but to my videos in general, giving updates on David Hunter's call and some of the things Peter Schiff is saying in the market, and any other highlights that may come out. But let's start really. This week began with Wednesday, with Tesla, or excuse me, with the Fed coming out and doing a quarter rate hike, or a quarter point rate hike, and that was expected. If they'd gone half a point or something, the market would have collapsed a bit, but they didn't. They kept it at a quarter point. And then when Chairman Powell came out and talked about what had, was give questions, he made an initial statement. He basically was pretty benign. It didn't move the markets really at all. But then after hours is when things started to get interesting, and that's when Tesla reported. And when Tesla reported, they actually met their profit target. They were a little short on revenue, but they guided, basically higher, which I thought was interesting. Elon Musk did, and when he did that, I thought, I wonder if that's going to play out, or how that's going to play out in the market, because they did miss on revenue, and they have been cutting prices of some of the Tesla models. But that kind of started the fireworks for the entire week. And you can just kind of see, this is Wednesday. We had already had some gap ups last week that I talked about and all, but it sent Tesla up. But I mean, it's been basically on a tear, as you can kind of see here. Since its low of 102, but that started this entire weekend, and I knew, just because of all the things that were being reported on and happening this week with the earnings and the Fed, and then a couple other items I'll talk about here in a minute, that this would affect how things were happening. Now, on Thursday, Apple reported, and interestingly enough, they missed on both the revenue and their earnings. And it's still, the next morning, still basically shot up from there, which kind of surprised me. Now, or today really. So on Thursday, I knew the earnings were coming out. It went up, and I actually sold out because I don't like holding to earnings, and the options were really pricey. But then this morning, it gapped down, from where it left off. But the entire day, it spent just going up, and reached a peak and then came back. And we can kind of see we may have just hit a double top here, which is not a good sign typically, for this particular stock as far as the candlesticks go. So is that a double top? I don't know. I guess we'll find out. And it doesn't always work out, but double tops are just something that people use. If you're going with the probabilities that you hit a double top, that's going to go down. Now, how far does it go down? Does it go back down to fill this gap here? All of those types of things. So they missed, and their stock went up. Now, Google missed, and on both profit and or earnings and revenue, and it got clobbered pretty much the entire day. Now, it closed off better than where it had been, and went all the way down 103 or so. And then Amazon got clobbered. But interesting enough, Amazon kept moving down, it gapped down, and then continued to go down the entire day after their miss. So, three different stocks, three different outcomes as far as technology goes. Um, it's up in the air where it goes from here. I think Apple, the word basically is that Apple went up because um, they have such a strong market share, and that I believe most investors believe that some of their supply chain problems were associated with what was happening with Apple, and so they continued on up. So I regret actually selling those Thursday, but I also owned Amazon and sold it, and that was a good move. So sometimes you make moves based on earnings when you're unsure about what's going to happen. I couldn't see good earnings coming out, and I was right about that. I was just surprised that Apple kind of bucked the trend and went ahead and went up. So just kind of the rest of the things that happened this week. I always make mention of the 30-year rate. We went from 6.2 to 6.19, so it didn't move a lot, but it's still moving down. Again, because of, what happened that I'll get to here in a minute. We had the Fed that I just spoke about, but then the employment rate came out. And the non-farm payrolls was really a market mover today. 517,000 quote unquote new jobs. With all the layoffs and everything, it's strange, but there you go. 517,000 jobs. And so then the market reacted negatively to that because they're anticipating that the Fed will follow through basically with increasing the federal funds rate. And then on the ISM manufactured PMI was another shot, basically, because the PMI, the services section, went from 49.2 and an expectation of 50.4 to 55.2. And then that really collapsed the market in the afternoon. It made it come back a little bit later. So it wasn't an awful day as far as the markets go, but it wasn't, it could have been much worse. And it may still. I don't know, especially with some of these earnings that came out, what's going to keep this thing moving forward. Now, David Hunter, he is still sticking by his stance that we're going to be seeing all-time highs and everything. And if you look at the Dow Jones Industrial Average, we're not that far. But we put it weekly so we can kind of see everything. The all-time high was 36,932, and we stand at almost 34,000 at close today. So, we're only a couple thousand away from reaching the all-time high for the Dow Jones Industrial Average. Now, the SPY has a little bit more work to do, but still, it stands at 412.35, and the all-time high is 480. And David Hunter's calling for this to go to 6,000 once we bypass this 480. So if you consider that, we're not really that far off. And so, if we've gone up too fast, too quickly, we are putting in, there's a higher low and a higher high that we just printed here. It can go back down from here and then continue its march on up. Last thing I think on David Hunter's side is that he thinks we might go to 400 or so, where we are right now at 460, I think about. He's expecting a pull back there too before moving up and, kind of topping the mountain out here, and then get the melt up once we bypass that. So, it's it's been an interesting week, and Now, but we have some headwinds if these things are going to happen. We have the 10-year Treasury that's just been kind of meandering on down. That some of these back in, we started to fall below my 3.41% here, and then it popped back up today. And so this is going to be a headwind. And does it continue up there? If people are convinced that the Fed's going to continue raising rates and keep them up there, then there's a good chance that's how things end. But and then that would kill off David Hunter's call. The DXY, popped broke below this 101 standpoint. Now it's making its way back up. How far will it go? I don't know. Next line in the sand, around a 103.8 or 104-ish. So you have that going on. But, one thing I want to keep in people's mind, in your mind, is that the Fed, and this is a Peter Schiff type of a comment, but with 31.5 trillion in debt and growing, cannot continue to raise rates and keep them there for that long, or we're going to be paying interest. That's going to make up much of our federal budget. So it still has that type of problem associated with it. So how much further can this go? I don't think it can go that much further. Let's take a look at what Crude did. Has been on this downtrend here. Curious to see what it gets down. I think David Hunter is calling for it to go to, somewhere in the 60s, maybe 60. We'll see if this keeps on meandering down in the days ahead. The VIX, despite all the craziness today, once it broke this cone and we broke below that, we're still in this kind of downtrend here, and stands at 18.32 even after we were up a couple hundred points, and then we were down 225 points, so all in one day, and that still didn't move the volatility index that much. As a matter of fact, it moved it down today. So you sometimes wonder if this thing is really, well, I already know that the volatility index doesn't necessarily represent just the volatility in the market the way it's calculated, but it's interesting that it continues despite a lot of volatility in the market of what we would call volatility, or I would call volatility. This thing continues to make its way down. Put calls started back up today, made people a little bit nervous. And, if we look at the investor sentiment, it still, went down. Now, remember, Wednesday night or Thursday morning is when this comes out. So 34.6% bearish. We're still not over 30% bullish. So in general, the investor sentiment is down. But here's the one that kind of surprised me, is even despite today's activity, we have now hit extreme greed. And I think this may have a lot to do with Apple. We do have a very resilient market. But on the other hand, when I see this, then, I'd rather see it here for the market to go up. So we may be a little overbought here where the market stands right now. But that is what I wanted to cover this week. Look for some other videos that I want to do in the next week or two. And remember, there is always a better way.